Hello, welcome to the Economic View. I'm joined as always by Evan Lucas, our market strategist. Hi, Evan.
Hey Tony, how are you?
Yeah, very good. Evan, let's start with some numbers out of the US in terms of earnings season there. And of course, we're in our own earnings season at the moment. There's been some fantastic results coming out from here. But let's just talk about what's happening in the US and then let's talk about our local economic data that's been coming out the last few days.
Yeah, good point. So, as we keep been talking about this whole global growth story and the US being the bright spot and all that kind of material, the reason you look at the actuals is you can see in the bottom up that the macro is actually coming in the micro. And the US earnings season and the two charts that we've got for you today show the EPS expectations to forecasts and beating that by 70%. That's the highest we've seen in almost 15 years. And the revenue line beating consensus by, I think it's 78%. That's also a record we haven't seen for such a long time. It shows very clearly that US economics is filtering through into earnings, into revenue, and that's why it's quite an exciting thing. This is despite all the volatility that we've seen on markets. You've got to remember that the macro is still very rosy, and the micro is now actually showing that in the retrospective data. So US earnings season is a big tick, and as you already alluded to, our earnings season, it's only very fresh. We're starting to really ramp up. But the companies that are in growth are showing some really, really good numbers.
Yeah, and actually, we ran a story this morning just on the disconnect between commodities and the markets, because the disconnect being that there's strong demand for commodities, and despite all the volatility on the markets, mining companies are actually in a great space.
Yeah, and I think we spoke about this last week with all that vol going on. Is if you actually looked through the headline equity data and the equity movements and looked at industrial metal markets and looked at bulk commodity markets, etc., they actually rose over the week, which is not what you would normally expect to see in bouts of volatility. Normally, you would expect safe haven buying and piling into all sorts of things, and basically anything with a risk attachment would lose out. Now, you would therefore have expected copper to do that. You'd expect also things like iron ore to move off a little bit. They weren't really affected by what happened last week. So again, it justifies what we're talking about, is that the macro thematic of global growth and synchronized global growth wasn't impacted by last week. There are bits and pieces of data coming out over the next week or two that clearly will be very interesting. US inflation is one of them. European growth is another. Our growth and our inflation data is all part of that. But nothing fundamentally has changed yet. I'll put the yet there just in case. But it's still very rosy for 2018 on that growth story.
Now, earlier this week we had the NAB Business Conditions Survey. We also had consumer confidence. Bit of a, again, using the word disconnect, bit of a disconnect there because confidence actually fell, whereas business conditions have improved.
Yeah, and it's interesting that the disconnect between business and consumer has been a consistent one for several years now. If you look, conditions and confidence, and I think that's the part of it with business, popped right back up. Conditions sits at 19. It's not a record. The record's 21, but I think it's the second or third best month in the survey's history. If you look at the confidence, that was the more important one. It's popped back up, and they are more confident about looking at 2018. And as we've just spoken about, you can see why. I mean, earnings in the US, earnings here in Australia are justifying why businesses are pretty rosy about the outlook. Confidence from the consumer is quite volatile, and Westpac themselves do point out that there are so many factors that cause it to jump up and down. It's been quite a steady grind towards optimism over the last couple of months for consumers. They did have a good December. Spending was up. Expectations around rates in Australia were also looking quite nice. Mortgage expectations were not under as much pressure as they probably were, particularly in September and October last year, which was what Westpac really highlighted. There was a lot of talk, a lot of media speculation around rate rises that could come from the RBA, and they've dissipated. And the more and more the consumers heard about where the RBA sits, that part of their survey has improved in terms of the optimism, because we know, and this is where the pessimism comes from, we know the pressure that the retail consumer is under with regards to what they call their basics, housing, education, health, and just your general spending on food, etc. Those four, and electricity, those five make up roughly almost 60% of the average take-home weekly earnings. And that's where the pressure comes from, and that's where the pessimism is, because at the moment we are hearing about food, We are hearing about electricity prices jacking up. You're also now talking about, insurance as well. So health insurance is quite a big one politically. All that, they said, filtered into possibly why we dropped back into pessimism.
Yeah, there is this sort of underlying fear, I suppose. Just people are just fear of what may be coming ahead, sort of further down the track. But when you look at, as we've spoken about many times, the economic fundamentals feeding into things.
Yeah,
it's actually a good story.
Yeah, it is a good story, and I think what we've spoken about is that for the average person, the average mortgage holder, the average investor, things look pretty good. I mean, in terms of any form of levers that can change the macro perspective in this country are very, very limited. Like we know the RBA has pretty much ruled out 2018. The statement of monetary policy last Friday, Philip Lowe's speech last Thursday, and then the actual RBA meeting last Tuesday as well, pretty much confirmed that. So I think your average mortgage holder can be semi-confident that they're not going to see a big jump up in interest rates from their bank. They're not going to see an impact on that space. The housing market has been softer, but it's not contracting. We're not seeing, a 5, 6, 7% contraction in prices. We're just seeing a flattening, and that's textbook. Most people will not sell the houses when markets start to soft off. So it does hold prices up. Yes, that's a concern if you're trying to buy into the market, but you'll probably find that the price that you were looking at in October, November last year is almost roughly the same price you're seeing now, because things have eased off a little bit, and that's a good thing. And your ability then to service your mortgage looks okay. The interesting one to watch now is with the business confidence and the talk around tax cuts and what's going on in the US, etc., is wage growth. We know the US is getting wage growth and it's finally coming through. We economically tend to lag the US by about 2 years. Do we see at the back end of this year wage increase? It's certainly a probability. I mean, it's happening in Europe. If you have a look at what's just happened in Germany and France around negotiations that are going on their part of the world, they've actually managed to increase their average earnings by about 4%. There's been big negotiations for some big companies. So we will start to see that kind of discussion, that kind of talk, and that filter through. And that'll be really interesting because that's another positive, will help consumer confidence. Yes, it puts a little bit of pressure on inflation, but it's not a bad thing. The RBA still doesn't think inflation will get on a core level to 2% for another year and a half. So it's all pretty steady, despite, as I said, what happened last week in markets. The macro is pretty good. In fact, it's pretty rosy in the post-GFC world, and there are some really good bright spots that can also be quite an investment opportunity.
We'll keep an eye on those bright spots. Thanks, Evan.
Thanks, Tony.
Thanks for joining us on The Economic View.